Good afternoon, everyone. I'm Dave Weisberger, the CEO of CoinRoutes, and it's March 30th. And what we want to talk about today is the impact in the market that we've seen this month from the shenanigans coming out of the banking crisis. Specifically, the closure of Silvergate, the forced closure of Signet, and the seeming recovery of other banks starting to fill that need. And we're going to start this conversation by looking at a couple of very interesting metrics. So this chart right here that I'm waving my cursor around shows the average daily spread between the best bid and the best offer. It's actually a measure of backwardization because that's what's happening in most cases for trading one full Bitcoin over the course of this particular month. And what you can see is very interesting. The top of the graph shows the tether pairs, the Bitcoin and Ether against USDT. And you can see that the average spread between bids and offers has vacillated very little. Not a lot of movement. It's been unaffected. But down below, the blue and the gray lines are the average spread that we see between Bitcoin and Ether and dollars. So basically what you're seeing here is an immediate reaction where people who are trading both of these in dollars are dealing with a significantly more fragmented market. To put this in perspective, if you zoom in here, what you're seeing is on March 6th, you had somewhere around 1.75 basis points, 1.5 basis points, 1.5 basis points, 1.5 basis points, 1 basis point, etc. Then on March 11th, when everything started to happen with Signature, it ballooned to 12 basis points. In the case of Ether, it ballooned to 27 basis points. And you can see that down here in this chart. And in fact, it's only recently, yesterday, where the spreads started to get back to normal. Now, yesterday's a bit interesting because it was a very low volatility day, so it's entirely possible that that spread will continue to be larger. There are a couple of interesting implications here. But before I talk about the implications, let's look at a different way of looking at the exact same thing. So if you look at the CoinRoutes data portal, this is measuring the same thing that we were just measuring for Bitcoin dollar, looking at all trades where the terminal price for one full Bitcoin across these exchanges. And what you see is a graph that shows down here, you'll notice 60% of the time it was somewhat backward, and 40% of the time there was an actual spread. The bid was lower than the offer. You could see significant amount of dispersion in terms of which exchanges were at the best bid. It looks like Kraken was fairly dominant at the best offer for this over the last day. But when you look at this chart, you'll see you don't see a lot of blue peeking out. Now, when you see blue peeking out, it represents the bid being above the offer by a significant amount. And you can see over here, there was a period of time that was happening, but it was pretty small. Now, if you contrast this to the exact same analysis done on the 21st of March to the 22nd, you see it looks very different. Here you can see the bids dramatically higher than the offers for pretty much the entire day. And you see while Kraken was at the best offer most of the time, Coinbase and LMAX dominated being at the best bid, and there was a significant divergence between. So what does this all mean? It means more trading costs for investors. In other words, if you were trading and you had most of your money on Coinbase at a period of time when Coinbase was higher than every other market, then chances are you paid too much if you were buying. If you were selling, you were going to be okay, but you didn't know how okay, and whether or not you were going to be aggressive enough is going to be suspect. So the fact is, when the banking situation happened, trading costs for the average investor went up. Now, curiously, CoinRoutes customers did not have that happen. So what we saw with CoinRates customers is CoinRoutes customers actually were able to capture some of this effect and actually outperform the market. Now, this is easy to demonstrate. So if you look here and zoom in on this screen, this is looking at January through February. So January and February, you can see that in dollar-based trades, we handled $2.3 billion of trades. This was 2,500 or so orders. So around $1 million a trade, a little bit less, but not by much. So large institutional size orders. And what you can see is for those $1 million orders, we had slippage to the far side of 7.5 basis points. And slippage to the mid of around 9 basis points, which for $1 million trade in crypto is quite good. In fact, most market maker spreads are close to double that. You could also see, compared to optimal routing, we outperformed by 3 basis points. Now, when I say optimal routing, I mean assuming you had coins or dollars on all of the exchanges I showed you in that list, and you had in enough to do it on every coin we traded, we outperformed that taking strategy by 3 basis points. Considering that's more than we charge, that's a pretty good deal. And that's standard performance for us, generally outperforming. Generally, CoinRoutes does a good job. But if you look at March, what you see is something exceptional. During this period, we traded $1.3 billion. Once again, 1,300 some odd orders just in March to date. And so about, once again, $1 million an order. Except on the last month, we were only under 4 basis points away from the far side and 7 basis points away from the mid. So you see the spreads got a little bit wider, but the fact is we actually outperformed. Compared to optimal routing, however, now we're over 10 basis points better, or 3 times. Now, why did that happen? Well, that happens because at CoinRoute, what we do is, if you look at our trading system, what we do is we're looking at all of the market data that we see, and when you're placing orders in our system, it is using the full market data from the full book. So if you happen to only have your resources on an exchange that's kind of lagging below the market and you're buying, it's going to be aggressive. If, on the other hand, you're selling in that situation, it's going to wait for the exchange to come back to being more normal with every other exchange. And that turns out to be very, very valuable to our clients. In short, when market instability happens, the markets are under stress, we shine as a trading platform even more than we ordinarily do. But that makes sense because at the end of the day, knowledge is power. And if you're trading on one exchange, or you're trading using a slimmed down market data plan, you don't have access to all the information that you need. If, on the other hand, you use a system like ours, which has, in our case, 10 terabytes of data being processed every single day, then you're never going to be ignorant in your order placement. And when you have a machine doing it, obviously it's going to be fast and on top of the market. So that's what I wanted to explain today. We'll be putting out a research paper that people can see. It will be on blog.coinroute.com, or you can get to it through the coinroutes.com website. That'll be out next week.